Okay, we are going to start because otherwise we'll be too late. I just wanted to say that Raja Khalidi, who was supposed to join us, lives in Palestine and in the West Bank. But because all the flights were cancelled, he couldn't come. But he sent a video, so we're going to just play the video.
Good afternoon. I'm Raja Khalidi, Director General of the Palestine Economic Policy Research Institute, and I'm very happy and privileged, in fact, to be addressing this distinguished audience, which I had hoped to be a part of, but regrettably, the circumstances here in Palestine meant that I could not be with you. But I do appreciate highly the BNDES and IDEAS invitation to me, because I consider that an invitation to Palestine and an acknowledgement by you all of how important what we are going through and have been going through for this past year is, not only to us but to the peoples of the developing world and to indeed people of conscience throughout the world. Hence, rather than being able to talk about these subjects, both within this meeting and on the side, unfortunately, I'll just have to suffice with telling you what I was going to come and talk about. And under the theme of this panel, namely consequences of financial inclusion and exclusion, let me just start by saying that Palestine's economy has always been a strange hybrid of inclusion in the global economic system, but exclusion from the multilateral trading and financial system. So it's really been living the worst of both worlds. So it was included very much so as an open economy in the global economy, in the regional economy to a lesser extent, but subsumed within Israel effectively and its own international trade and financial relations, and subject, of course, to the rules and standards, but also the crises of the global economy. Good afternoon. I'm Raja Khalidi, Director General of the Palestine Economic Policy Research Institute, and I'm very happy and privileged, in fact, to be addressing this distinguished audience, which I had hoped to be a part of, but regrettably, the circumstances here in Palestine meant that I could not be with you. But I do appreciate highly the BNDES and IDEAS invitation to me, because I consider that an invitation to Palestine and an acknowledgement by you all of how important what we are going through and have been going through for this past year is, not only to us but to the peoples of the developing world and to indeed people of conscience throughout the world. Hence, rather than being able to talk about these subjects, both within this meeting and on the side, unfortunately, I'll just have to suffice with telling you what I was going to come and talk about. And under the theme of this panel, namely consequences of financial inclusion and exclusion, let me just start by saying that Palestine's economy has always been a strange hybrid of inclusion in the global economic system, but exclusion from the multilateral trading and financial system. So it's really been living the worst of both worlds. So it was included very much so as an open economy in the global economy, in the regional economy to a lesser extent, but subsumed within Israel effectively and its own international trade and financial relations, and subject, of course, to the rules and standards, but also the crises of the global economy. And needless to say, subject as well to Washington consensus policy commitments and prescriptions. On the other hand, it's always been excluded from the international multilateral economic institutions or system. The international financial institutions, of course, the WTO, and at the level of even multilateral and regional banks. And it's also been excluded from any recourse to any form, really, of policy space, of any meaningful policy space, monetary, fiscal, investment, or trade. I'll return to this subject later, but first I think we must pause for a few moments to recall why we're here and how we got here. So, the core missing component in everything when we talk about the Palestinian economy, and in particular about financial inclusion, is, of course, the absent sovereign governance. And that is a status which remains denied to Palestine 75 years now after Israel obtained its sovereign state and began to build its self-reliant and highly productive economy. Meanwhile, Palestine was reduced to a prolonged confrontation with a settler colonial project, a campaign that came in waves over the decades, now reaching all parts of Palestine, and which has become only fiercer and wider and more powerful in recent years, and indeed more brutal and unabashedly racist during this terrible war. You've all been witness, like those of us in Palestine, to this catastrophic war that Israel refuses to halt. And as economists and observers sitting in Ramallah, we could find very few theories to analyze or methodologies to measure impacts, and instead new concepts are necessary to understand the economic impacts. And we at MAS over the last 10 months have been producing our own readings on these issues, on some of these issues, and we have painfully, as Palestinians, learned the real meaning when we talk about genocide, and in this case, the economics, if you wish, of genocide. So the war began with a very clearly and still upheld aim of making Gaza unlivable. This was affected, and Gaza has become unlivable through the weaponization of famine, which is a concept which the humanitarians came up with, and then an extraordinary domicide, as it's called, which the United Nations special rapporteurs have come up with. Spatiocide, because there is no place yet still standing that is recognizable, and whatever is standing has been taken out of context because the context has been destroyed. Scholasticide, in the sense that all of the universities have been destroyed. A whole year or 2 years of educational achievement is on hold. Sociocide, because of the communities that have been shattered and will probably never be able to reconnect. And hence, an econocide. So I won't go any further into the numbers. I don't think this is really of any help right now. It's very bad. It's never been this bad. It's going to cost tens and tens of billions to get out of this, and God knows how that will even where the pathway to that. At this moment, we don't see one, but I'm sure one will make itself and will be imposed, perhaps, by the heroism of the Palestinian people and by the right sort of support from around the world. If we're going to look at things like conditions for reconstruction and recovery, to try and just start looking forward. There are a few necessary conditions for any recovery, any relief, recovery, and reconstruction, the 3 R's, so to speak, over a 5 to 10 year period at best. Needless to say, but people don't say it enough, is we need a full Israeli withdrawal from Gaza, and we need Gaza reconnected to the West Bank and to Egypt. That has to happen, or else Gaza will remain suffocated as it was for 15, 17 years. We need Palestinian political unity in a new framework, not the defunct Palestinian Authority, which really only functions as a municipal, if you wish, or regional government, self-government, and not the PLO, which unfortunately no longer can claim the representation, global and absolute representation of the Palestinian people, and which we know has been degraded over the years, and not Hamas, because it spent all of its ammunition, so to speak, and we're not, and tomorrow is not one where we can continue the way we did for the past years. So things need to change. And we need, of course, internationally, a clear, concrete, time-bound pathway to the imposition of a two-state solution. And this, of course, will require fundamental political transformation in Israel towards a commitment to that, which, again, today looks extremely bleak. And indeed, with our Arab brethren, we need reconciliation, and instead of intervention and interference. So, I mean, we need to reinstate the sort of balance in relations between Palestinians and Arab states that used to exist, perhaps, when we were united. In the absence of the above, we face a unique and unprecedented effort to erase the Palestinian cause, the question of Palestine, and its people. And this takes us from the pre-2023 status quo and economic stance of what we used to refer to as resilience and state building or institution building, to a new reality of subsistence and resistance. The economics of subsistence and resistance is what we're in today. How long it will last, we have yet to see. In the West Bank, you have still a functioning core of a Palestinian economy. It's able to, but its ability to recover is threatened with a war no less severe in the West Bank than in the Gaza Strip if it does not submit to the Israeli diktat. And that is a diktat which is not only the military, but of course has a very important financial component because of the fact that the Minister of Finance is a rabid, if I may say, settler leader, and indeed part of the leadership of the National Religious Zionist faction, which really has been, he was very clear yesterday. He said, we should be able to get rid of the Gazans, get them out. If it was not possible, if the world would let us, that wouldn't be an immoral thing to do. So I won't talk about that, but let's remember that the West Bank is every day under assault, no less severe, perhaps much less wide than Gaza. Two cities, Jenin and Dulkaram, have suffered major infrastructural and housing destruction. Of course, Gaza Strip is the definition of an economic holocaust. I don't, want to be to exaggerate, but it has been literally burnt. It's an inferno which has created mass famine, disease, human suffering, and a trajectory of social disintegration that nobody seems to be able to do anything about, even 10 months into the war. In East Jerusalem and among Palestinians in Israel, there is a silent, what I call, if I may go on with the terms, cogiticide. It's a repression of free thought and of expression, of marginalization. It's a policy of marginalization and discrimination of 2 million Palestinians living inside Israel and in East Jerusalem. Now, back to our subject, therefore, with this background in mind. How has Palestine been included in the global economy? So that has happened through a negotiated and agreed customs union with Israel from 1994 that is only part of an effective economic union, which is skewed, of course, between Israel and Palestinian economies and imposed because nobody asked us, and features no Palestinian monetary or fiscal policy space, either vis-a-vis Israel nor the rest of the world. Also, it has been included in the global economy and, in fact, linked to, through the adoption in 1994 of a Bretton Woods-inspired commitment to a free market economy, despite all of the distortions of an economy under occupation, which was this commitment subsequently enshrined in a basic law in 2004, and a neoliberal social and economic agenda that gained popular buy-in and helped perpetuate an otherwise or increasingly unaccountable political leadership and system. And also, this inclusion has been through the pursuit of an inappropriate, in terms of its results, or at least an unfeasible development policy, which was, an export-led development policy, and hence import open, without much really to export or being allowed to export what you have because of occupation, which of course is a policy that ignored the industrial and agricultural productive base and was not able to deliver social justice. Now, how has Palestine been excluded from the multinational trading system and financial architecture? First, by the nature of its commitments, again, under Oslo Paris, to being subsumed within Israel's economic envelope, but this was, of course, only expected for a 5-year interim period, so at the moment it was probably a reasonable pathway to independence. But because of what's happened since, and by the cynical position of international community since the Second Intifada, placing new conditions on Palestine, all of which were calculated to prolong an adverse and insincere peace process, which everybody knew Israel was not really serious about, especially once Netanyahu came to power. So basically to manage and not resolve the conflict. So, that also kept us in this subservient, if you wish, status. Palestine has also been excluded from the global financial and trading architecture by denying Palestinian sovereignty under the pretext of unresolved statehood. So membership in the international financial institutions and WTO can easily be dismissed, or the Palestinian case for membership can be easily dismissed by saying, well, it's not a state. And of course, all of that entails having no resort to international economic rules, which affect trade facilitation, sovereign borrowing, etc. The only rules in Palestine, international economic rules in Palestine, is subject to are those imposed by the global financial system on Palestinian banking to control, of course, what? Illicit financial flows. So, in closing, let me just mention, and I would have loved to have been there to discuss, but we'll have a chance, inshallah. Principles, 4 principles, if I may. We can add to them, but these I think are the first that come to mind, and I think that are important. Principles for Palestine's balanced integration into the global economy, and this is not so much a day after as a ask for tomorrow, so that we actually have a day after, so to speak. The very first thing is this concept of sovereign economic functions, not economic sovereignty, sovereign economic functions, that the Palestinian government should be able to deploy, which would precede statehood and precede independence and precede the conflict, the resolution of the conflict. Perhaps, in fact, one would hope would lead to the resolution of this conflict. So this is to do with borders and control of borders, to do with the regional trade and investment agreements and the ability to enter them and apply them, and ultimately a greater domestic fiscal autonomy, both in indirect taxation and an appropriate taxation system for the sort of war-torn economy we're talking about. Second point, and I think this is something that can begin tomorrow again, financial sanctions on Israel in retaliation for its financial sanctions on Palestine. Now, this maybe is a member for state-to-state relations, but it can go further, and I think it should be studied as a tool that should be explored at the international financial institutions, for example, as to whether the sort of violations Israel continues to perpetuate. Yesterday, they deducted $30 million from Palestinian trade revenues because they want to reimburse some Israelis that were killed on October 7th. So, I mean, these sort of, regular violations, I mean, it provoked the G7 to issue a statement not so long ago, threatening Israel with sanctions, well, it didn't threaten them with sanctions, but threatening Israel to not go ahead with the financial sanctions that it subsequently, by the way, did back down on. I would add to this, number 3, international, what I call fiscal solidarity, and would entail, according to the state of Palestine, sovereign borrower status at international financial institutions and development banks to enable it to access finance for development and reconstruction. A tall order perhaps, but I believe, it's something that is a political matter, and if there's a political decision that can be made, then the technicalities of how to do that could be worked out. Finally, I think this goes along with what I've said already, swift moves to grant the State of Palestine observer member status in the WTO. It's had an application pending there for 15 years. Observer member status, without beginning its accession, in its capacity and recognized as a separate customs territory, not as an independent state, which, for those of you who are familiar with the WTO, is an option for Palestinian, and this would allow Palestine not recourse at this moment to that system, but it would allow the beginning of recognizing Palestinian sovereignty. And if it's sovereignty of a separate customs territory, so be it. We don't need to say where that is or who's responsible for it. But anyhow, these are the sort of ideas that I think need to be put on the table these days. I think Brazil is an excellent place for this discussion to begin among friends and among experts like yourselves. And I would just add and finally say that this is as much a Palestinian agenda, which I push in Palestine, as much as it is a South-South agenda. And it's one that would produce, I believe, some concrete changes in the political landscape and in prospects for peace and justice. Thanks again. Have a great time, and all my best to Rio.
Hello. Having the opportunity to hear to Rajan, we will continue our table. First, good afternoon. I'm very glad to be here as a facilitator of this table. I would like to thank everyone for coming and welcome the speakers. And we will have 3 speakers today in this afternoon, and I will present them for you. Our first speaker is Jacqueline Laguardia. She is senior lecturer and researcher at the Institute of International Relations at the University of West Indies, Trinidad and Tobago. Our second speakers will be Maria Antonietta Lins. She is associate professor at the Institute of International Relations at the University of São Paulo, chair of the undergraduate committee and graduate committee, and coordinated of the bachelor's degree in international relations of the Institute. Our third speaker is Mayada Hasnain, Senior Program Officer of International Economics Associates, IDEA. Not having much more to say, let's call the first member of our panel. We will give 15 minutes to each one, okay?
Yes, good afternoon. There is a PowerPoint presentation. I don't know if you can upload it there. Well, while the presentation goes, good afternoon to everyone, or as we say in the Caribbean, pleasant good afternoon. I would like to thank IDEAS for this opportunity, and particularly Professor Alicia Puyana from Mexico and Isabel Rodriguez. They are the 2 persons that actually introduced me to IDEAS about a year ago. And this is the first time I have the opportunity to exchange with you, and actually I have been enjoying tremendously the discussion. I'm an economist, but it has been like more than 10 years I'm doing international relations. So it's also good to be back into this type of conversations and bring a lot of what my career actually is. I'm going to try to present from here. I don't know how yes, it works perfectly. Oh, by the way, I'm working in the University of the West Indies. This is a regional university. It is headquarters in Jamaica. The institute is in Trinidad and Tobago. We have another campus in Barbados. So as you can see, there is a real regional projection in the type of studies that we do. And of course, by my accent, you can understand I'm not an English-speaking person, so I'm from Cuba. So I'm a Caribbean person, and this is what I'm going to be speaking about today. The slide I'm presenting to you is showing the group of small island developing states. And actually, my presentation would like to talk about the financial challenges that SIDS are facing today. Specifically, I'm going to be talking about the financial challenges that we can find for Caribbean SIDS. And you can see there the group of Caribbean seats. What is interesting about the Caribbean is that usually, and we have been listening to that since yesterday, we know that there is a type of secondary place for the Global South when talking about financial issues internationally, the reform of the international financial architecture. But in this discussion, small island developing states takes even a more secondary place. And interesting enough, when we talk about Latin America and the Caribbean, it happens the same for the Caribbean. Talking about Latin America and the Caribbean usually stops in Latin America, and the Caribbean part usually never show up. So part of my interest here is try to see what are some of the particular challenges for development that Caribbean seats are facing. Some of them are, of course, quite similar to other developing countries, but some of them are quite specific to the Caribbean. There I'm in the slide, you can see some of them, and I'm sure that when looking at them, you can relate to many of the problems that appears there. The issue with the Caribbean is that all these development challenges are, let's say, multiplied by the fact of being small island developing states. It means that we are talking about countries that are, well, of course, relatively small land extension. They have a tremendous challenge when it comes to transportation costs. For instance, we can see that they are very open economies, but at the same time, they of course suffer from a narrow export base. That is the result of not only a colonial history, but also the result of physical constraints. You cannot build land. You cannot have, you cannot go over the amount of people that can live in a certain space. So these physical constraints are multiplied today because of the geographical location of these islands. They are in the belt of hurricanes, so it means that we are facing the increase of extreme meteorological events year after year. So climate change in the Caribbean is actually a real thing. And what it is something that, of course, has everyone very engaged, and there is a major discussion about climate change. There are countries and there are communities that this is about real survival and the challenge of pretty much having to reconstruct every year or every 2 years or every 3 years what has been done for the last 10, 15, 20 years. So these type of constraints are quite specific for the Caribbean. The Caribbean, of course, has other development challenges. It is quite dependent on services. It is quite dependent on tourism. And of course, some of the islands has specialized on financial services. And definitely that puts the Caribbean in a extremely economic vulnerable place because they depend tremendously on what happens around the world. It is interesting to see that a group of countries that have chosen to specialize on financial services do not have a strong currency. They all depend on a strong foreign currencies that they, of course, cannot control. So that enhances even more their vulnerability. And in the Caribbean, we are also facing high indebtedness. And when I'm talking about high indebtedness, let's see if we can see there, we are talking about countries that actually have an average public debt that goes beyond the 100% of the GDP. What I'm showing there is the information of the last years. As you can see, in 2019, we had a tremendous advance because there has been a lot of policies that took a lot of sacrifice in Caribbean economies to actually reduce the amount of indebtedness. But then COVID came. So a lot of what was done was again lost because there was no other chance to actually go and get more debt, because how you are going to face such a major shock as COVID, especially with tourist-dependent economies. So as we can see, it seems that part of this, or a lot of these development issues that we have in the Caribbean definitely are multiplied because of the fact of being small island and small economies. And okay, let's see, what did I do? Okay, so moving on. Obstacles for accessing to finance for Caribbean seats. Some of the obstacles I believe we have been talking about during the last two days that are similar for many of the developing world. However, Caribbean seats also face particular challenges when it comes to accessing to finance. I'm going just to talk about a few of them. First, most Caribbean economies are classified as upper middle income economies. So it means that they are immediately removed from the possibility to access to official development assistance. The only exception is Haiti. The rest has to go through the channel of actually not having this preferential concessional treatment. And interesting for the Caribbean, we have seen that this preferential treatment has been eroded, especially since the 90s. We have seen that in its relation with the European Union, in its relation with other international partners. So it means that the Caribbean gets treated pretty much as everybody else, when definitely the situation is not similar to most of the world. The Caribbean, many Caribbean territories are included in the European Union list of non-cooperative jurisdictions. And this is quite interesting to see how the European Union is classifying territories as non-cooperative jurisdiction for tax purposes, but this is what we have. In the Caribbean today, we have Anguilla, Antigua and Barbuda, Trinidad and Tobago, US Virgin Islands, Belize, the British Virgin Islands, and Curaçao as part of this. They are part of this list. In the territories I mentioned, I'm sure that you identified some territories that are not necessarily independent states. There is another, here we have another fact for the Caribbean. Colonialism is well and alive in the Caribbean still. And of course, it has also impact. It has an impact when it comes to regional integration and regional efforts to actually face some of these development challenges I have mentioned. Another element that is actually affecting, having an impact in the Caribbean has to do with unilateral sanctions. And I believe we mentioned that yesterday. We have unilateral sanctions that have direct and indirect impacts in the Caribbean. First, we have in the Caribbean, we have Cuba, a Caribbean seat that of course is facing the embargo/blockade. Put it the name you want, it's there, it works, it actually have very negative effects. And this is a very clear example of a direct impact that is preventing a country to access to financial services, even when they are without preferential or any type of preferential treatment. And indirect consequences are there too. For instance, the sanctions against Venezuela affect Trinidad and Tobago because Trinidad and Tobago and Venezuela are partners. They have a joint interest when it comes to oil and gas projects. And because of the sanctions against Venezuela, Trinidad and Tobago cannot go ahead with some projects that they have to exploit some cross-borders gas reserve that are on the sea. So it means that most countries, they have the possibility to profit from it, but it has to be gone to a pause. I believe there has been some type of license allowed by the US, but definitely we have a problem there. There is another major element that is financial de-risking. The amount of correspondent banks that has been retiring from the Caribbean in the last year is significant. I'm going to show on a slide just for you to have figures about this phenomenon. And funny enough, and I have another example here. When we talk about climate change, when we talk about green funds, we suppose that countries like the Caribbean should have a clear avenue to access to this type of funding. Well, this is not necessarily the case. We have seen that Caribbean countries, of course, the mitigation in the Caribbean is very little. I mean, we are talking about countries that pollute, are responsible for less than 1% of the emission of polluting gas. So it means that the irony is that we have countries that contribute very little to climate change. They get a lot of the impact of the climate change, and now they have problems to access to some funding that is tied to mitigation rates, because they definitely cannot show a major mitigation possibility because they do not pollute that much. So what we are talking here is a very interesting scheme of how you make problems even more difficult. So this is part of the Caribbean development challenges, especially when it comes to access to finance. So I have not that much time. Well, this is just the list that I mentioned before about Caribbean economies being graded as upper middle income, high income economies. We have the changes in corresponding banking relationship. You can see that there has been a tremendous reduction pretty much in every case there. And I believe I will stop here. How to move forward? What can be done then in the Caribbean, or at least what is some of the elements that I have identified in terms of the consensus that exists in the region when actually trying to move forward this situation and trying to increase access to financial resources out there. First, there is a consensus in the Caribbean that the eligibility criteria to select countries to access to ODA based on per capita GDP has to be changed. Definitely, this is not fair. This is not giving a real picture of what are the development challenges and the vulnerabilities for the countries. So this is something that needs to be revisited and definitely transformed. The Caribbean countries, they show support for the approval of this proposal of the multidimensional vulnerability index. That is a kind of proposal actually to remove this type of criteria of classification for GDP per capita. There is also the idea to support the creation of a multilateral credit rating agency that actually will be reflecting the reality of Caribbean economies. And we can also see how there is also the consensus of creating financial products that actually that are tailored for Caribbean economies. Two examples, and I'm going to end here. If you want to follow this type of discussions about what is going on with SIDS and about SIDS access to financing and SIDS development challenges, very recently we had in Antigua and Barbuda in the Caribbean the 4th SIDS conference. And there was the recognition about how the international financial architecture definitely is not reflecting the realities of small island developing states. And the Caribbean, together with other small island developing states, is actually partnering and trying to modify this type of rules, some of the rules of the international financial architecture. And finally, if you don't know about the Bridgetown initiative that is coming out, it came out from Barbados. It is an initiative led by Prime Minister Mia Mottley. I suggest you to go there and check what the Caribbean is actually proposing to try to transform a little bit this very unjust international financial architecture. So I will end here. Thank you so much.
Let's move to our second speaker, Maria Antonietta. The floor is yours.
Okay, good afternoon, everyone. I have also a PowerPoint. Yes. Okay. So the first thing I have to say is that I understood the panel topic differently from my colleagues. I'm going to talk about financial inclusion, like people having access to finance. So another way to talk about that. Of course, there are lots of information and lots of aspects to deal with this subject, but I definitely decided to look at two as you're going to see, large emerging economies, and mainly Brazil. Because this is a very important, not only topic, but a very important trend in Brazilian financial sector. First, if we want to define, here I'm just quoting a World Bank definition of financial inclusion, but we would say it's the possibility of people and small businesses to access to financial services, most kinds of financial services. I don't think, but okay. So the consequences, like the title of the panel, the consequences of financial inclusion and exclusion are not really clear. Because we can, on the one hand, we could expect that financial inclusion is a goal for progressive governments to allow people to profit from financial services. But on the other hand, there is also the like the problem that maybe it would or could lead to an over-indebtedness to these people. But most of everything, I think, but most of all, the important is to allow people to be 100% citizen. And that's the way I understand financial inclusion. Okay, let's go. I think I need to take my computer, otherwise I don't see what it's reading. Just 1 second, because I have glasses, but they're not enough. I'm so sorry for interrupting. Okay. Perfect. Now it's good. So again, looking at this chart from the World Bank again, and there's no ideological reason for me to cite the World Bank twice in 5 minutes, but financial inclusion is a very complex process. It includes not only people, the different ranges of income people, but it also implies changes in legal and institutional settings in a country. And most of those the initiatives of financial inclusion have been led by the state. And have been mostly when it comes to banking. Of course, I don't have the time to look at the different ways, and here we have people from India, we have from Sri Lanka, etc., and which are countries that have a very important also experience in other ways like microfinance, etc. But I'm looking mostly to the bank sectors. So the question is, does financial inclusion need to be led by the state? Is that only a state-led policy? The answer is obvious, not easy and not direct, but it is absolutely true. And for the two countries which I'm going to look at better, which are Brazil and India, the state has a priority space and a priority, very important role. Mostly, not only the state as a whole, but central banks have been playing an important role. Most of those initiatives and experience have been favorable, have been looking giving good examples. Yeah, okay. So the first thing, looking at the two countries, and why do I think it is relevant to look and to compare the two countries? First of all, they have like an experience, a common experience and a common characteristics to their financial systems. They are financial systems in which state-led or state-owned banks are crucial. They occupy an important, or they play an important role. In the case of Brazil, I'm just going very fast to mention, and there are many Brazilians here. The three federal banks are very important to finance development and to finance people and small and medium enterprises. And for the non-Brazilians, I name the Banco do Brasil, which is a commercial bank, the savings bank, the federal savings bank, which is Caixa Econômica Federal. And in this case, the Brazilian case, and with financial inclusion, it is very important. And the BNDES, where we have been 2 days ago, and which is absolutely crucial for long-term investment. Okay, so in the case of Brazil, financial inclusion were based in the conception of citizenship, basic income, gender empowerment. I know Lena is not going to agree with me. I know that, and I know, and that's why I did my presentation thinking to a dialogue with your presentation from yesterday. But, so, in the case of Brazil, I cannot lose my time, but, so, a social program, a social policy program was first importance to financial inclusion in Brazil. For the non-Brazilians, I name Bolsa Família, which is a cash transfer program for which people or households allowed to get these funds, these transfers, should have a bank card to receive that. This made a very, very important change and a deep financial inclusion in the country. These cards are of the Federal Savings Bank, Caixa Econômica, and people would go to the lottery houses and get their cash with this card. In India, there are many examples of private microfinance that leverage the metropolitan poor in the 2020s, and the policies of digital platform for popular insurance program were also an important way to guarantee, to bring people close to all these things. But in, just let me, sorry, can I come back? Oh, no, I'm going out. I want to go back. Jesus, oh no. How can I go? Here. Can you put, Anil, please. Okay, they're helping me. One more. No, now it's fine. Now it's fine. I can go. I'm sorry. Yeah. So You guys, I'm not sure that you can see, but I'm just showing some data about financial inclusion in Brazil and India. The first year, the first figures are from 2011. The last figures are from 2021. So in the case of Brazil, people having a financial institutional account went from 56% in 2011 to 84%. In the case of India, people went from 35% to 77%. This is not few. Credit card and debit card also show a very strong increase. And in the case of Brazil and India, Brazil much faster increase. Savings as well, mobile money, etc. There is also another phenomenon that is absolutely important for financial inclusion in those two countries, which is, yeah, okay. Well, first, let me take a closer look to Brazil. So, as I said, in Brazil, financial inclusion was absolutely state-driven, and three main channels were used. The social policy, as I mentioned, central bank and digital payment system, which is absolutely important for Brazil. It was created in 2019, and it spread extremely fast. And today, I don't know for the non-Brazilians if you had the experience, but even people begging on the streets are asking for a transfer, virtual transfer. So they say, they have a paper, they say, I am hungry, please send to this number, and they would get cash. And the digital credit also provided by the public banks. On the private side, which is also remarkable in the case of Brazil, a lot of new fintechs and new startups had increased the access to low-income population to bank accounts with no fees, etc. We could discuss, and I know my time is running out, but I'm running out of time, but we could discuss it later if you want. So this chart is just to show it's data from the central bank. From 2005 to 2022, the share of adults with access to banking services. It went from 60% to almost 100% of adults being able to use financial services. If we look, and then I know that it's the other aspect that Lena doesn't like, the indebtedness has also increased. It has some problems. Of course, people have debt to use, but at the same time, and the two lines is the higher is the total indebtedness, and the lower is without housing debt, so housing loans. So what we say is also an important increase, and but what we see is that people are able to get money to change their lives somehow. If it's a good change or not good change, okay. But a few consequences of all this. Oh, sorry. Yeah, but just 1 minute now. I'm going to finish. So the first problem is, all these changes, how far are they leading to a change in the financial system? First aspect, cost of credit. In Brazil, cost of credit is still extremely high. And it's still extremely high because of many characteristics of the financial system. First, high concentration, high banking concentration, very high banking concentration. Also, the income inequalities that persist are reflected in the financial system's products. There are different products for different groups of income. Inclusion finally can be relative if we think of these differences. But overall, and finally, my conclusion is that financial inclusion remains a very positive policy in the case of Brazil, and there is a long way to go from now. Thank you so much.
Let's move to Mayada, our last speaker.
Hi, everyone. First, obviously, I'm very, very humbled to be here with, so many of my, sort of ex-professors and people that I've intellectually looked up to. And so very happy, very humbled to be here. The presentation's up. Okay, so thinking about the consequences of financial inclusion and exclusion, and I'm going to talk about Sudan, and I'm going to do it in sort of a historical way, and I'm going to look about the sort of different eras in which Sudan was included, excluded, and what the implications of that have been, and then also think about what the terms of both the inclusion and the exclusion, and what is the role of that is in the context of Retrofit for purpose. So obviously the current context that the Sudan is in, a war which broke out in April of 2023 between the Rapid Support Forces, the paramilitary, and the Sudanese armed forces, and the economic crisis which has ensued because of that. There's estimates that there is going to be negative 12% GDP growth, which is obviously massive. Inflation is at 140%, massive destruction of infrastructure in the capital and in many other cities, and obviously the humanitarian crisis. So, and this is the current context, and one of the things that I would like to also achieve in kind of moving you through these different eras is to also think about how we got into this current war, and thinking about it away from the ways in which it's being framed, in the Western media, or it's being analyzed very loosely as sort of just a kind of a propensity for violence in a poor African country, and think about the structural reasons that may have led, or some of them may have led to this current crisis. So, historically, Sudan's engagement with the international financial system could kind of be traced to what was called then the Sudan breadbasket strategy, which occurred after the Arab-Israeli War and the oil crisis of 1973, where essentially Gulf capital was supposed to be put into Sudan and use that to expand the agricultural sector and export that food to the Gulf and to the Arab world more broadly to reduce their dependence. So the strategy failed, and obviously there's no time to kind of get into the details of that. But the money that was meant to come in didn't come in, and the money that did come in was not necessarily, didn't lead to the increases in productivity and export, et cetera, et cetera. And so there was a massive accumulation of debt because of that. And obviously creation of sort of corruption hotbeds associated with the military dictatorship of the time. And so 1978, the IMF comes in and says, okay, you know, we'll give you a loan, you need a loan. And that was essentially the first big moment where Sudan became engaged with the IMF. And obviously as we know, the economic reform plan included currency devaluation, liberalization of trade, interest rate increases, limiting money supply, and of course, the lifting of the subsidies, commodity subsidies, and other consumer goods. And then on the other side of the economic reform plan was a strategy that was devised by the World Bank, which was meant to increase exports of cotton, and obviously prioritized private sector as opposed to public sector. And at the time, the cotton sector was controlled by the government, but the recommendation was to begin privatizing it. And that did happen. And what then occurred was essentially, a large amounts of money were put in, and it benefited religious leaders, big traders, big landowners, and was really a marking point in terms of like sort of supporting the creation of a class that were associated with the military dictatorship and who were able to use these funds. And what happened structurally was that smallholder farmers were, kicked off of their land, which was now used for large-scale mechanized projects, and local food production dropped. And this also overlapped with the pouring in of wheat, largely funded, obviously, by USAID. And this also changed really even food consumption patterns in the country as a shift from sorghum, which was locally grown, to wheat, which is imported from abroad. Yes, smallholder farmers were kicked out of their land, herders were kicked out of their land, and that also created conflict between these two groups, who also belong to different, tribal groups and slightly different cultural backgrounds. And you've probably seen, the war in Darfur as being framed as a Arab-African conflict, and not necessarily any mention to the structural component of a conflict over resource and over land between two people who have been dispossessed by the ruling class of the country, with the support, obviously, of international financial institutions. Moving forward to sort of mid-80s, where there's famine, there's a budgetary crisis, and there's a popular uprising in 1985, which toppled the regime, but only 4 years of a makeshift sort of transitional government, and then a military coup in 1989. And I want to point out, because as we move along, we're going to see that something very similar happened since 2018, leading up to the current war. And I think that that sort of cyclical nature, again, is always being spoken about as if this is just a tendency for chaos in African countries, and a tendency for dictatorships to just sort of emerge, and violence and authoritarianism, and not thinking about that in terms of what happens, what kind of policy measures create the reality, these kind of realities. Okay, so again, this sort of begins the era of, exclusion, where a fundamentalist right-wing Islamist regime took over. Sudan got the, state sponsors of terror designation by the US, and, wasn't repaying its debt, and 1993 was suspended from the IMF. Yes, a state of exclusion from sort of circuits of Western finance, which overlap with the beginning of the export of oil, and the massive revenues of that, and also Chinese involvement in infrastructure, and obviously also in the oil industry itself. Interestingly, the government at the time, the Bashir regime at the time, decided to have its own, homegrown adjustment programs with absolutely no financial or technical support from the IMF. Austerity, mass privatization of state-owned enterprises, massive layoffs of civil sector, reduction in expenditure on health, education, et cetera, et cetera. And so I want to, kind of point out here is what for the people of Sudan does then inclusion and exclusion mean? When the types of policies that are being implemented appear to remain consistent regardless. And there's also then a question of the ideology at play as opposed to just the institutions which implement the reforms or which advise that they happen. So, an oil boom happens, growth averages 7% a year for several years. And the oil boom obviously was associated with expansion of consumption in urban centers specifically. And the top of the list of that would be obviously the capital city of Khartoum. The oil revenues were facilitating consumption, increases in imports, and a neglect of agriculture and other productive sectors, which also means a neglect of rural sectors and rural livelihoods, because that money that was coming in from the oil was being used, like I said, for urban sort of middle class consumption, and also being used as dividends to maintain the reproduction of that ruling coalition. So yes, kind of relative macroeconomic stability, urban stability, and then instability, obviously, in the quote-unquote peripheries or rural areas. Poverty is at 46%, and then insurgencies in the Darfur region, and what then became, one of the longest, civil wars on the continent, and one of the most deadly, in the Darfur genocide. And that was so big in the media, right? It was so big that we need to end this now. And again, there was very little attempt to think about the structural components of the war beyond it just being kind of an ethnically charged war. So these are, just some of the data to show kind of the export of goods and services was all the way up to the oil was all the way up to 12 billion a year. Foreign direct investment was also on the rise. And is it? Yes. And interestingly, out-of-pocket expenditure was also on the rise, because even though all of this money was coming in, and even though there was a boom and GDP was growing at high levels, the ideological inclination of the state was still towards austerity, through sort of time and space, and through so-called inclusion, eras of inclusion and exclusion. Okay, so South Sudan then gains its independence, and the oil reserves are completely lost, and a new commodity comes to play, which is gold, which is also again how it's extracted and how it's moved is very different to oil and less centralized. And so what happened, and this is quite important to what's happening now, is that the Bashir regime was very desperate to kind of regain the same levels of money coming in order to maintain the stability that he was able to maintain through the oil revenues, and then created the kind of allowed the rapid support forces at the time were called the Janjaweed to essentially take over the extraction and the movement of gold and the export of gold. And so this is when a very serious budgetary crisis occurred, because the gold was then being smuggled and it was being taken to Gulf countries, namely UAE, et cetera, et cetera. And I think it's important here that I think the nature of the commodity itself made it easier for that to happen, because it's piled into a plane and it's taken directly, as opposed to it's going through tunnels and is harder essentially to smuggle. So between 2013 and 2018, a very serious budgetary crisis occurred, and then 2018, the revolution occurred, and the IMF again decided, okay, yes, we want to re-engage. This is a new era. This is an era where the people of Sudan have spoken for, you know, demanding justice, et cetera, but then the terms of the inclusion and the reform plan that was devised was very, very similar to what was, you know, being told, what the government was being told to do in 1978, which is list of subsidy, devalue the currency. And this is obviously not new to all of us here. And although the, you know, sort of the Minister of Finance at the time said we need 5 billion, the IMF said, well, you're not getting any budget support until you do 1, 2, and 3. And I think here, and this is something that the theme that's been coming up is sort of the political stronghold that these institutions have, right? And their ability to not only direct what the, you know, government does with its budget, but also direct the course of the political options for the government, especially for a country like Sudan and during a very difficult time. So, you know, the Alan said about in Sri Lanka, we were essentially given 2.5 billion in a period of 39 months, which also it's you know, quite little given the needs. So yeah, I don't have much time left, but I'll try to sort of run through it. So yeah, again, you know, inclusion, once again, there's a celebration of this government, there's a celebration of you know, an end of a 30, you know, year reign, but still economic policy concretely remains the same. And the commitment to austerity remains the same. And what the you know, what the implications of that are, I think, is that inclusion of who, inclusion into what, you know, and inclusion, you know, as we've seen, inclusion through the terms of the Bretton Woods institutions has usually not been favorable. And also, what does the exclusion then also mean? Can it actually exist, given how we are, you know, as developing countries implicated with, you know, global value chains and the needs of consumption in, you know, across the world, and with the emergence, obviously, of new regional powers. Sorry, I will finish, I will wrap up. I mean, I think concretely, I think what this means is when we think about the impacts of inclusion, we need to talk about the terms, but we also need to talk about how these, you know, how these terms come to be. I mean, in 2018, the revolution was a very important moment, and it was a moment where there was massive grassroots mobilizing, and it saw the creation of a movement that was flexible, and that although wasn't self-proclaimed, you know, ideologically like left wing or such, but it had very clear articulations of economic justice and of wanting to do economic policy differently, and you know, IMF policies were not only in a different planet, but they also witnessed the reform agenda that was supported by the IMF post-revolution could not have been made possible unless there was a systemic crushing of that resistance through violence, through arrest, through propaganda, to kind of, you know, confuse what justice is and confuse how we can get there, et cetera, et cetera. And so I just want to end on a note, and I think we probably need to talk about this more in the, you know, remaining day and a half, is what role can resistance play to change the rules of inclusion, and because we need to build power to change these laws and to do the reform. Right? The institutions in and of themselves have no interest in making these changes. So how do we converge between social movements and between Retrofit for purpose? Thank you.
We don't have much time, but I think we can give the floor to the audience. Maybe 3-4 questions in the maximum. Yeah, this gentleman there, blue.
Thank you very much. I'd like to just make a couple of comments on the first presentation and a question on a comment on the second presentation. On the first presentation, I missed the role of regional integration in the Caribbean as a way to protect the Caribbean from vulnerability. The Caribbean had several instances of successful regional integration, for example, the regional negotiating machinery, of CARICOM, the Treaty of Basse-Terre of the Organization of Eastern Caribbean States, and yet at the same time, the Treaty of Chaguaramas, 1973, and the revised treaty really put sort of the smaller economies against the bigger economies. What's your take on this issue on the regional integration? Can the regional integration put on its right footing be a way to protect the Caribbean from this external vulnerability that you mentioned? The second is, I think in the Caribbean there are missed opportunities, like the role of creative industries that have not been exploited to their full extent. Regarding the second presentation, with regard to financial inclusion, you define financial inclusion basically in terms of access, like the World Bank, or let's say that the IMF in terms of infrastructure. Why not define financial inclusion in terms of finance for productive development? That's number one. Number two, in general, financial inclusion has been analyzed from the supply side, meaning there are a lot of instruments of financial inclusion, but if you look at the demand side, it's not cost that matters. Some of the main surveys on SMEs and even on larger firms and medium-sized firms show that 50% or more, let's say in Colombia, Peru, Mexico, Costa Rica, to name a few surveys, say they don't need credit. And the question is, why? And the last question I want to ask in this regard also, what? Okay.
Okay, I also had several questions, but I will try and be very, very brief. I just want to first of all highlight the importance of the 4 points that Raja Khalidi mentioned at the end. I think we really have to take it very seriously in terms of how we think of the Palestine economy. With regard to the financial inclusion, honestly, first of all, I think we have to stop falling for the hype that the Indian government keeps presenting, and I find this very common in Brazil. This belief in the Indian hype about financial inclusion. And there are two things I want to mention. Inclusion, like Esteban, it's not just defined by access, nor is it defined by mobile banking, which is basically about ease of transaction. It is not about financial inclusion. Access to prolonged productive credit is an entirely different ballgame, and in fact, there's massive exclusion and continuing exclusion on that one. Also, inclusion does not translate into empowerment. I think both of these we really have to be very, very conscious of. So, and please, in general, everybody, please just don't believe the Indian government hype on this one. Okay. Finally, Mayada, inclusion and exclusion are obviously both really terrible. So is there any hope? I mean, seriously, it's all just bad, 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 and then worse? And then finally you die? I mean, come on.
You, Lena? I think you are the third, yeah.
Thank you. Thank you all for your presentations, very stimulating. I would just like to make a comment on what Maria Antonietta said. I think it's important to put into context that it was not, let's say, Brazilian merit to have installed, you see, this very large financial inclusion process. Because since the 2000, the World Bank launched a report called Attacking Poverty, and it was really the moment when the World Bank shifted. And instead of saying that it's bad to give cash to the poor, as they used to say during the 90s, they decided that it was very important to provide cash transfers to the poor. And in 2009, they decided altogether with the consultative group to assist the poor and the World Bank to launch the initiative of financial inclusion. And little by little, they invited other IFI to participate. And the central banks, they are part of it. Even the G20 is part of it. So it's a huge, large international architecture that has promoted the collateralization of social policy, because if there are 3 billion people who access is just bancarization and having access to credit, with the World Bank now thinks it's not enough. we have to change it because we need to develop the insurance sector and other sectors that haven't developed yet, enough, which is the fire sector. You see, 80%, 90% in Brazil, as you probably know, of credit concessions since 2010 are consumer credit only. So it's unbelievable, you see. So the point is, there is a huge international architecture that has created, promoted the collateralization of social policy, and this is why we decided that it was decided that we would provide cash transfers to the poor. So it's not a merit of Brazil, of the central bank. This is happening everywhere. Look at South Africa, exactly the same problem with the same consequence, dramatic consequence, everywhere. So I think it's important to highlight this because this is what behind this international financial architecture. Thanks.
Now we can you start? Yeah?
Okay, well, thank you so much for the question about regional integration. I mentioned before that I have been working for the last 10 years in international relations, and actually I would have loved to do a presentation on regional integration on the Caribbean, but it is not the topic I was called to present. But nevertheless, thank you so much for giving me at least the opportunity of saying something about regional integration in the Caribbean that I really believe is a key issue and quite important. As you have rightfully mentioned, there are different mechanisms in the Caribbean for regional integration and cooperation. CARICOM, ACS, the OECS. Actually, in terms of financial integration, I believe that the OECS is a tremendous example that we have not been paying attention to. Actually, the OECS was a pioneer on creating a unitary, unique space. They have had a good experience of having a single currency. So there is a lot to learn about the experience of what the smallest states in the Caribbean has been able to achieve. I believe because they are so vulnerable and so small that they understood they didn't have another chance that actually go very deep in integration, including financial integration. Now, when we look at the rest of the Caribbean, I believe that regional integration has not met the purposes, especially when it comes to economic integration. Nevertheless, comparing Latin America and the Caribbean, I believe again that the Caribbean has a lot to teach to Latin America, but this is another discussion. But coming to these financial challenges and regulation, we can see that there is a lot to be done there. And an example is, I believe you mentioned the regional negotiation machinery. Actually, the regional negotiation machinery disappeared. It disappeared because in 2008, the machinery became so successful when negotiating that I believe that in a sense, CARICOM understood it became too successfully independent out of the CARICOM regulation. So after a very contentious process of negotiation with the European Union of the EPA of 2008, the regional negotiation machinery was dynamite, let's say it like that, and became part of CARICOM. And when it comes again to economic integration, financial integration, it is interesting to see, and I'm going just to put the example of the Bridgetown Initiative. The Bridgetown Initiative has been a proposal coming out of the Caribbean led by Prime Minister Mia Mottley. Interesting enough, it is an initiative led by Barbados, but it does not have, as far as I know, the full endorsement of CARICOM. How come? So again, there are a lot of issues within Caribbean integration that has to do with still, I believe, a very early experience of independence. There is a strong feeling about what national sovereignty is, and there is a lot of reluctance sometimes to go very deep when it comes to economic integration, and financial negotiations are part of this type of conservative, or let's say reluctance to actually go deeper. So an example is just with the Bridgetown Initiative. How come that CARICOM actually has not endorsed that? At the same time, you can see that CARICOM has allowed Barbados to be the leader when it comes to the implementation of the CSME and financial integration, because it is Barbados the one who has the portfolio for the CSME. The CSME is the CARICOM single market economy. So you can see sometimes this dual behavior that is also part of the Caribbean psychology, I believe, in many instances, and you can see that when it comes to regional integration. But definitely, regional integration has a role to play, but the point is how to play that role efficiently without countries understanding they are ceding part of their national sovereignty. And I believe this is part of the regional integration dichotomy and challenges as well.
Maria Antonietta.
Okay, thank you very much for the comments and for the reaction. I'll try to address the three of them together. First, I think it's important to say that maybe I was not able to make clearly the point. But yes, I am aware of the international initiative to enhance, to promote financial inclusion. And I hope not to be so naive to understand that the financial sector, the big banks have interest in this. Absolutely. But the main point, I think, the main aspect of financial integration is to allow people to be to participate in the modern economy, in the current economy. So to allow people to make payments, to use banks, to be, or even in the informal sector, to receive, if they are doing some jobs, services, etc. So this is one point. The other thing is that I also understand that I'm sorry, I don't know your name, about the supply side versus the demand side. Absolutely. But, it goes together with what Lena said about all this credit go to consumption. But it is absolutely important, first of all, as I just said, for people, small businesses, etc., informal sector, to have the ability to participate, to get money, to buy anything. I think this is already some progress, or an important progress. Otherwise, this population would be completely at the margin of the whole system. This is one. The other thing is, I'm absolutely, I agree absolutely with you that this credit, it would be lovely, more than lovely, important that this credit would go to the production side. But the thing is, I mean, when, like in the case of Brazil, I think yesterday Laura Carvalho presented well the problem about excess demand, inflation, etc. But I think in Brazil, with an uncertainty that we have been having, especially in the last 5 years, not only because of Bolsonaro, but even before that, we had a very strong recession, 2016, etc. People, and especially low-income people, do not dare to take credit for long-term or for different, even. Okay, but the important thing is that the credit is there and people could access to it. I think this is one point. Inclusion do not, about India, Professor Ghosh, I know I don't like the Indian government at all, and but there's no need to say. Yeah, we can. No, I know. It's. Yes, yes, no. But what I'm going to say is that I know there are many obstacles to be faced. There are many problems, but the figures say that people are having their cell phones, are being able to use the financial system, etc. Maybe it's not that intense or not so important as it should be, but yeah, but it's yeah. Yeah, over coffee. Yeah, yeah. But I have a lot of questions also about some other stuff. Well, what else? And I absolutely agree that financial inclusion is not financial. It's not empowerment per se, but it is something that I don't know. I think people have to have anyway. I would say that it's a human right to be able to access the financial system. Sorry? Not to be in that.
There is a document by those labs saying that it's a human right not to be in debt.
Okay, but they can choose whether they want or not.
Okay, I'm going to be, very fast. I know I'm out of time. I think about if there is hope. Of course, there always is hope, but I think there is hope in as much and insofar as there is pressure and there is resistance to economic orthodoxy, to neoliberalism, and I think this is. I think, like, for example, if during the time that, Sudan was, supposedly excluded and was exporting all this oil, should this money have been, reinvested in increasing productivity within the agricultural sector, or making links with, the industrial sector, or, building a social protection system that isn't just based on, very limited cash transfers, or maybe the outcome for the country would have been different during its years of exclusion, but that didn't happen. And it didn't happen for many reasons. So one of them is the national government's commitment to economic orthodoxy, and to continue to protect its own class interests, which are most of the time more close to the interests of global finance than they are to the interests of the people within their own country. And I think this is also something that we need to think about when we talk about, like, a coalitions of, like, smaller governments, or of South-South cooperation, but, cooperation between which groups, is it at the national level? Is that really progressive given the current structures of governance and given the current ideological inclinations of a lot of countries in the governments of a lot of countries in the global South? So yeah, I think hope really does lie in us finding a convergence between social movements and resistance, and sort of reigniting that, and working and doing the work that we're doing now, in joining or in support of that type of resistance. Thank you.
I invite you to debate financial inclusion effects during the coffee break, okay? And next at 4.